Welcome back, YouTube. So in today's video, we're going to be discussing Robinhood as we got the earnings call today and we see an update as far as for like the financial standing of the company. And if you follow my channel, you know that I've seen a number of like people and even articles written about as far as like the safety of different exchanges. And even when I started my short reports and about removing your coins from the exchanges and stuff like that, the question always came up, okay, which exchanges are safe? And Robinhood is safe because it's a broker and an exchange, and it can't go down and stuff like that. And we have to really look at the bigger picture. And I've always took the stance that no exchange is safe. No one is the exception. They all make money the same way. They all have massive risk exposure. And not to mention that people have taken I want to say like a vendetta against Robinhood even since its first IPO announcement was made public. So we see here that the company took a 9%, pretty much laid off around 9% of its staff in April. And per today, it looks like they're going to lay off an additional 23% as they're missing revenue projections, the earnings per share projections, pretty much just missed everything. Absolutely. This terrible financial news here for the company. And let's take a look here at the report briefly. You'll see that in the press release, they reduces headcount by about 23%. And they're blaming the layoffs primarily in operations. The layoffs will be in operations, but he's saying that the deterioration of the macro environment with inflation at around a 40-year high is pretty much the reason that they're having to make these adjustments. We're going to get into that, but because I also took part in Robinhood when they opened up, and I'll give you my exact numbers here. I have them next to me, but we'll say that for the most part, when we've looked at the share lending and stuff like that, when that announcement came out, I made a video that day, and I said that when you start seeing companies start reaching for additional revenue, start coming up with these, and it's not just them, it's simultaneously happening across the market. When you start seeing these grabs and these reaches, they're looking to generate revenue. That typically is a sign. You have to kind of keep that in mind. Like when you see that the transactional volume is down and they make money off of that and people are taking crypto off of exchanges, we have to take into account, okay, what are they going to do to make money? And lending has always been the go-to. It's like an industry standard. So when I saw that share lending come out, that's why I made that video. I knew something was up automatically. This is why I say remove your coins, get yourself something like a ledger. That's what I use. I have a link in the description for them so that you can go directly to the site and not be bothered about, or not even be bothered, but be worried about getting something with malware or something already on it. You have to worry about that. Let's see here. So we're going to take a look at the chart, but you'll see that the revenue was 318 million versus the 321 that it was projected or estimated. So it missed revenue again. It lost 34 cents a share versus the 37 cents that was estimated. And it says the 318 was up from the 299 in the first quarter, thanks to an increase in revenue from cryptocurrency activities and net interest. And see, this is one of the reasons why you're going to see the share lending and the staking and all that kind of stuff come out. This is like those bumps in revenue, that extra $10, $20 million. Where do you think they're getting that revenue from? Why do you think these lending programs are coming out? They know exactly what they're doing, and it's really an industry standard. That's one of the reasons. Make sure that you're removing your coins. But let's take a look here at the actual charts for Robinhood so that you can get an idea, because I want it to be no mistake as far as to why this is happening. I'm not going to say the economy and inflation and stuff like that has no effect, but we have to make sure that we're looking at the complete picture. So Robinhood has pretty much not even held up a point of resistance or a floor or anything really since its opening IP. It's literally been on a slope just all the way. I don't want to say a slope to hell, but you can see here from its opening in August, you see that it was just pretty much just falling. And I'll zoom in here. Let's see, because I want to also just remind you. Matter of fact, I'm just go year to date. I just want to remind you that when this IPO first opened, people were really upset at Robinhood still. And if you remember the sentiment, they were making statements saying they were going to short it into the ground and stuff like that. But I knew that Robinhood was going to have a nice bump when it initially opened. So I did take a position in Robinhood, and I sold very quickly. Not at the peak. I think it peaked at like 85, but I sold. I will tell you my exact positions. So I bought in. My first buy was on July 29th at $38 a share, and I made another buy on the 29th as well for $37.65 a share. And I sold on August 4th at, where is it? At $62.86 a share. So I don't try and time the market. If I would have held, it went up to like $80 or something, whatever. I was fine with my percentage from 37 to 62. I'll take that all day. But I knew that there were going to be a massive opportunity to, make money as far as for the initial IPO opening. Most IPOs, if they're a large enough company and have a big enough branding, they typically spike when they open up. And they'll have that consolidation, and typically at that point you have to wait for the dust to settle. So not recommending you chase IPOs, because you can lose your shirt. But I felt very comfortable about Robinhood, so I took a position. But the decline of Robinhood is more than just what's going on in the overall market. This is outside of the market and the inflation and stuff like that. A lot of people want to see Robinhood suffer. There's a lot of people. There's some people have said, "Oh, okay, they've gotten over it," or they didn't have money in certain plays where they got burned. But there's a lot of times people were not able to execute trades last year, and they gave out like a little settlement or something like that later. There's a lot of people that were in certain plays and they couldn't execute their orders, and they ended up losing tons of money, and they're upset about that, and rightfully so. And these people I've seen have been part of certain groups and stuff like that, where I've seen that they were going to take, 6-figure short positions and stuff like that on the asset. So in addition to, it's one thing to short a company down or to have puts on a company that is doing well or doing okay. It's one thing to try and overwhelm it with shorts to try and drive the price down. But if you couple that with the fact that you're underperforming your own projections and underperforming in the market, it's a very tough combination to beat. Now, do I believe that Robinhood is going to disappear and just go bankrupt and stuff like that? I still don't believe that just yet, but I do believe they have a tough wall to climb going forward. And I do think that making these cuts here, that's probably going to be the tone, which is to cut the fat as thin as possible, and then also try and increase revenue. That's really only two things you do in business. Stop the bleeding, or either cut your expenses, or you raise more money. The only two options. So they're trying to do both here. And I believe that the loan programs, the crypto staking and stuff like that, we're probably going to see an increase as far as for rewards with that, to try and increase people holding their coins and stuff on there. You'll see the share lending. You see some more advertising and stuff about that. So as of right now, until we get some evidence of reversal or institutions start pumping the market back up, that's going to be their go-to, which is going to be lending to try and generate that extra revenue. So just be careful of that. You guys have my opinion. Definitely remove your coins, stocks and stuff like that. I would personally turn off share lending, especially if you're going to, for the most part, they're lending them to be shorted against your position. So if you're long, or even if you're trading, it doesn't really make sense. But, I digress. But if you want to have your shares and stuff on, just understand that you're only going to make a few pennies or stuff like that, unless you have an just astronomical amount of shares that you'll be able to make a decent amount, because Robinhood is going to certainly take the majority of that fee for lending out those assets. So keep that in mind. Move your coins. Check out the link I have in the description for Ledger. You can get one for Moomoo, even if you want an exchange who doesn't do payment for order flow. And you can get 10 stocks up to $2,500 each for a total of $25,000. I have an affiliate link in the description for Moomoo as well. And you can get that deal just by opening up and depositing any amount. So that's my update for Robinhood. I hope this video finds you well. I appreciate all of you. Thank you, and have a good night.